Hi guys, and a warm welcome back to the channel. Today we're going to take a closer look at the US dollar index DXY, which is under mounting pressure from both fundamental and technical angles, right? As you all know, I've been dollar bear since the beginning of the year, ever since we traded into this premium level here, the fair value gap, right? So we're going to break down the macro backdrop, zoom into some key technical levels, and I'm also going to share a key insight from the latest commitment of traders report, where we've got a notable jump in open interest, which under normal circumstances signals a deeper downside potential, right? Everyone in the group, you all know now, guys, if prices are in a downtrend and open interest is rising, that's a bearish sign. The opposite applies. If prices are in an uptrend and open interest is also increasing, that is a bearish sign, right? So when we look at dollar index today, right, we can see that it has now slipped back below the 99 level, right? We just slipped back below the 99 level. I'm just going to go on to a lower time frame, right? So if you remember correctly, my last sorry about that, my last analysis on dollar index, I reiterated the fact that as long as dollar is above 100, hunt for sell models, right? Look for dollar to trade into premium for a push to the downside, and that's exactly what has happened with dollar index. So the dollar index slipped below the 99 level, its lowest in a month, right? You can see that's the lowest it has gone since the beginning of May, right? Reflecting potentially weakening correlation with the yields. Now these are the long-term interest rates, and also increasing concern about the US fiscal health, right? So you have to understand from a fundamental point of view what's really happening in terms of dollar. Why are we seeing this mounting pressure on dollar index to the downside? If we look at it from a monthly point of view, right, we can see already dollar is heading to the downside. We could test the 21 lows. By end of this year, we could test the 21 lows, right? So markets got some temporary relief after President Trump delayed the EU tariff hike, right, to July 9. But confidence remains shaky, right? If you have to look at dollar index, the confidence remains shaky. The euro gained strength against the dollar. Euro USD pushed higher while the dollar lagged behind, right? So confidence in the US economy continues to be on the downside. It continues to erode, right? This was also brought about by Moody's downgrade of the US credit outlook. That has added fuel to the fire, especially after Trump's latest tax cut and all those spending proposals, which are expected to balloon the deficit, right? So investors are increasingly cautious now with global risk appetite tilting towards the euro and other major currencies. There's also growing concern about Trump's unpredictable trade tactics, right, which are impacting supply chains and a broader market sentiment. These are things that you have to understand. I'm just gonna do like a rough page as we go, highlighting all these things here. So just take note of what I would have spoken about, and then you can always dive deeper by yourself, or whenever you get the time to do so. Right now, coming back to the COT report. Now, if you're not in the mentorship group, yeah, this might be a bit alien, but as long as you're trading using smart money concept, using institutional supply and demand, you should have a clear understanding of the commitment traders report, COT report, right? You should have an idea. So we have seen dollar index jump, open interest on dollar index jump by 7.89% from 27,000 to 900, from 27,982 to about 30,000 plus change, right? This signals an increase in open interest at a time when dollar is what? In a downtrend, right? Now let's talk a bit about what's happening really under the hood on this COT report. So last week, open interest jumped by 7%, even as the DXY continued its downward move, right? That's significant. In trending markets, if prices are falling while open interest is rising, right, it usually signals a what? A bearish continuation, right? So we can see prices are falling on dollar index and then open interest is rising, right? That usually signals a bearish continuation. Here's why, right? Weak longs are being flushed out, as in getting stopped out, right? But new participants that are entering the market primarily on the short side, right? As the market continues to fall, shorts strengthen while remaining longs gets weaker and weaker. This then tells us that there's a fresh selling interest backing the move, right? And that the trend has a strong institutional sponsorship to continue to the downside, right? For the coming short-term forecast, say probably this week heading into next week, right? So you have to be in a position to analyze the data from such a point of view, picking out all these nitty-gritties of fundamentals that affect dollar index, right? So that's the COT report, right? I am going to do a breakdown of this, but I just want to highlight the key concept, the key fundamentals that we should look out for in terms of dollar index and where it's basically trading into, right? So we've got some key datas to watch this week from the calendar. So I'm going to go to the calendarinvesting.com, then I'm just going to go this week, right? This week could be pivotal with several major US releases coming in. So we're talking of core PCE now, which is normally the Fed preferred inflation gauge, right? So core PCE is coming in. Let me just have a look. When are we getting core PCE? That is on Thursday. So we're getting core PCE on Thursday, right? That's number one. And then we also have durable goods orders. We also have GDP revision, and then we also have consumer confidence, right? These are all coming in on Thursday, except for consumer confidence is coming in tomorrow, right? Tomorrow, which is Tuesday, right? Plus, we also have the Fed minutes and several key speeches. I think Fed minutes, they're coming in on Wednesday. You can see they're 8 p.m. We've got the FOMC meeting minutes. Now, the thing to look out for from these key data releases, right? Especially on the PCE, right? If PCE comes in soft, the dollar could drop further, right? But a surprise to the upside could trigger a bounce, could trigger probably a redistribution into fair value for another push to the downside, right? So a surprise to the upside could trigger a bounce and possibly back above that psychological level, which is 100. Yeah, that is if we do get a surprise number on the PCE, we could redistribute into this fair value gap right here, right? That's our fair value gap for this week, right? So now looking at the technical breakdown of this asset here. Now many people always ask me, even people who haven't joined the mentorship, they always ask me why do I focus too much on dollar index? Reason being that it is my benchmark, right? I don't do anything in the markets without looking at what's happening with the dollar, right? I don't do anything at all, right? It's my benchmark to my trade plan. It becomes easy for me to trade assets like the majors, USD JPY, Pound USD, Euro USD, Swiss C, USD CAD. It becomes easy for me to frame my trade ideas once I understand, once I have a clear focused on dollar index, right? So let's jump into the technicals, right? So the key levels to watch for dollar index this week and the coming, say, 2 weeks. We can see that DXY has decisively broken support at 99.65, right? 99.65. I'm just gonna highlight it on the chart. 99.65, right? We can see it has decisively broken that support. Now that support was brought about from last week, right? I would say not last week as such, but there was a time when we had open interest dropping on dollar index, which resulted in this redistribution into fair value. Now I'm gonna go to the COT report. The period that I'm talking about is from I think it's from let's see, what is this here? Yeah, I think that's the week of 8th of April, if I'm not mistaken. That's where we had open interest dropping a bit. That is from 29 to 22,000, and then we had another drop right here. This was last week. That's when we had this redistribution into fair value. Where is fair value here? We had this gap here. That was fair value on dollar index, and you can see how it has reacted after price had filled the imbalance, the fair value range, right, for dollar index. So your downside targets on dollar index, you are looking at 97, the 97.80 and 97.90 region, right? That's where you should be looking for dollar to head to. And we're talking of the lows of April, right? The lows of April are like your targets right now if you're going to short dollar index. If the 97.80, 97.90 levels crack, potentially you're looking at 96. Talking of this level here, down here, we're looking at 96 followed by 94 down to this side, right? An upside reversal. Now this is now probably because of a strong PCE, core PCE on Thursday. If we do get a strong core PCE on Thursday or a hawkish Fed tone during those FOMC minutes, right, we could see dollar push above 100 again. Now this will probably be something that I would prefer, right, to see dollar redistribute into this fair value here. You see, that would be proper IPDA price delivery, right? It would have rebalanced this inefficiency that we have from the week of 12 May and the current week. But remember, open interest data is suggesting that bears are quite in control at the moment. So on lower time frame, as long as you have a premium area that is inside your MWD, ideal zone for you to short, right? So just to sum it up, right, the US dollar is on shaky ground and technically weak, fundamentally vulnerable, and sentiment is clearly shifting. The COT report, which is one of our trusted fundamental news that we can get, confirms that smart money is pressing for shorts, and unless something drastic shifts in this week's data or the Fed commentary, this trend looks set to continue, right? We still need to stay flexible. Remember, we still need to stay flexible because data can surprise us and create a strong reversal. But for now, the technicals, the macro, and the positioning all suggest we remain bearish biased on dollar, right? So now I'm going to do just a quick analysis with the key levels highlighted on dollar index. So you can see here, this is our monthly chart, and we can clearly see now between the current month high and the lows of March, we've got a fair value gap, right? We've got a fair value gap, right? This is on the monthly chart, but take note also of the high of the current month. Then we've got previous month low, right? These are the lows of the previous month, which is April, right? April lows coming in at 97, 921. Remember, I mentioned this as downside targets. Then we have another key level on this monthly chart. See this bullish order block here, which has broken to the downside. We've got a bearish breaker there, the low of the OB. So you can clearly see now that this bullish OB did not provide any support whatsoever, right? So these are potentially your key levels on the monthly chart. Of course, we also have the current month low, right? Yeah, this is just for like your internal range liquidity level, like for shorting if we do get, say, maybe a run of stop. But yeah, that's just for short term, right? For long term, you're looking at the lows of April. You're also looking at potentially down here, right? But that's already long-term targets, right? So with the low of September 24 price breaking to the downside, you expect price to, you can see there, it's already 100.18. That's just above the 100 psychological level. You see, that's already just above our psychological level of 100. That could provide resistance to price for a push to the downside. You can see it when you go, say, a lower time frame. That's the 100 level right here. You can see here, right here, trades above, run stops, internal range liquidity, buy stops, price pushes to the downside. And ultimately, we had a big breakout to fill up this imbalance here, but that's already on daily. If we go to the weekly, that's where you can see clearly this imbalance here. Price fill up, break below 100, and price is pushing to the downside. So on the monthly chart, these are your key levels. Now, if you're in the mentorship group, do your further mark of this chart, markup of this chart, so that you don't forget when you go to a lower time frame, right? Now on the weekly chart, you can clearly see we now have a high probability bearish order block. High probability due to the fact that it's accompanied by a fair value gap right here. You see, we now have a fair value gap. Now the equilibrium of that gap right here, that's EQ for the gap, the imbalance, ideal area for shorting opportunities. If we do get a surprise number on PCE, or if we do get a hawkish Fed tone, that could push dollar index towards this level here, the equilibrium of the imbalance between 2 weeks back low and the current week high, right? That's after, say, a surprise data release. But as it is right now, I think we should be looking for a further move to the downside. So we've got a high probability bearish order block on the weekly chart, and we also, and if you can see closely, if you look closely, the low of that, the high of the OB, you've got a breaker, you see. So you'll be looking for something like this, price to trade to this level and then push to the downside, heading towards 97.80, or let's just say 98.00 price point. That would be an ideal forecast. That would be an ideal trade plan to follow. Anything below that, right? Any entry below that, they'll provide potentially a bit of a high risk setup, if I may say, a high risk setup, because once price trades to, say, above 100, you are in deep premium zone, and so you expect big expansions for price to move to the downside. Now that's on the weekly chart. Now take note of the low of the week of 12 May. I'm gonna go onto the daily chart. Now this is the daily chart. Now look inside the fair value gap on the weekly, right at the equilibrium. We've got a what? A daily fair value gap. You see, we've got a daily fair value gap, and it's also high probability for this week's forecast. That's your optimum entry, right? There's a fair value gap right here for this week's forecast. Expecting a retracement to fill up this imbalance here, and then price should push to the downside for the bearish continuation. You see, that's what you have to be looking out for. Now the price level 100 right here, where we had that weekly breaker, also presents an ideal optimum entry. But what you need to see when price approaches that level is a run-off stop above these candles high. You see, we've got internal range liquidity of buy stops there, so you need a run-off stop, trade above, close below, price should push to the downside, like what happened here. You see, right here, right there, that's a run-off stop, trade above, close below, we had a push to the downside. That's what you need to see if price trades all the way to, say, 100.089. And then on H4, so you're looking for price now to trade into the daily fair value gap, which is right here. So expect these up close candles to provide resistance when price comes to this level here. Expect these up close candles to provide resistance, and this high, expect a run-off stop. You see, H4 high probability, H4 bearish order block. Expect a run-off stop above this high, trade above, close below. We should see a structure like this. Price should then push to the downside. You see, so yeah, that's probably it in regards to dollar index. Of course, there is further analysis and annotation that you can do on this chart, but I'm just not gonna do it here, otherwise this video is gonna be quite long. And I've noticed not many people do watch these videos. People tend to just want to see what's happening on my entry time frame, what's happening on my hourly chart, what's happening on my 15-minute chart. There's nothing wrong with that, but always understanding what's happening on the higher time frame is very important to you as a trader, and how long you're going to last in this game, right? So if you found this breakdown helpful, smash that like button and subscribe to the channel to stay updated, and drop a comment below if there's some things that you need me to elaborate further, right? Just drop a comment below. So yeah, until next time, stay disciplined, stay focused, and trade safe. I wish you nothing but the best and good luck in your trade, folks. Thank you.